Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we're seeing right now, we saw it base in the 70 to 71 area last night. Couldn't break 70, and now we're seeing a push higher back in to try to test the 2080 area, which were the highs from yesterday. I'll be very interested to see what happens when we get there. The last thing the bulls can afford right now is a push back up to 80 that fails. That would establish the 80 to 81 area as resistance, wouldn't it? You got the high here from March the 30th, 81.75. You got the high from yesterday at 80. You've got to push beyond that if you're a bull and start to go to work on 2106 to 2107. The minimal task for the bulls today is to hold the middle Bollinger Band, the 20-day simple moving average, which is down at 66.5. You've got to hold that all day long. You can't give it up. You certainly can't lose it on a closing basis. So with this push higher, it really becomes imperative that middle band hold if you're a bull and you get over 2080 and ideally close above 2080. The ability to close above 2080 would chase a lot more shorts out of the market than were chased out of the market yesterday. Yesterday, from the regular session on, at least for the first hour to hour and a half, was a massive short squeeze. The Friday push lower caught everybody leaning, and that's what happens when everybody is leaning short. You get a real rip to the upside. So 80 is an area to watch. If you're a bear, you want to hold 80. You want to hold 80 all day long, and you want to try to get back below middle band and close below middle band. If you can do those two things, then this pop yesterday starts to look more and more like a bear market rally, doesn't it? What you would have to do, though, if you're the bears, is you would have to close the deal. The way you close the deal is tomorrow you expand on that, push lower, because you still have to deal with the 38 area, which is a double bottom, and then you've got a floor here at 32.33. So each side has their difficult areas to deal with. And right now, the bulls are in the process of testing one of theirs up at 2080. So the next few days, it'll be very interesting to see how it plays out. If the bears can ultimately win this battle, then you would really have a definitive set of lower highs on the daily chart. If the bulls prevail, then this just looks like some choppy action, but nothing really matters until you get back up over 2106, 2107 and potentially make new highs, which at least at this moment to me seems like a potentially tall order for the bulls. So we may continue to range trade here. I mean, what have we really been doing? We've been range trading. And if you're a trader, that's great. You got 32.33 on the extreme bottom, you got 2106, 2107 on the top. And, we've been trading in between. It's been choppy at times. At other times, it's offered up some really nice trades. So we'll see how the rest of the week goes. All right, that's all I've got. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.